ACH Processing. What is it and what does your business need to know? The ACH Automated Clearinghouse Network allows for electronic debiting and crediting of checking and savings accounts. The network currently operates in the U.S. and Puerto Rico. Originally created to reduce paper check processing, the ACH network began in the 1970s and was predominantly used to collect insurance premiums and mortgage payments in an automated fashion. Today, the ACH network processes billions of transactions each year and streamlines payment processing for thousands of businesses. The ACH network consists of more than 12,000 financial institutions, 650 industry councils, and a network of regional ACH associations, and is governed by the NACHA, the Electronic Payments Association in Herndon, Virginia. In 1980, the ACH network was changed slightly by the passage of the Monetary Control Act, which allowed for private sector ACH operators, third-party processors, to compete with the Federal Reserve Bank. Third-party processors provide sophisticated tools to help businesses effectively debit their clients for payments. Here's how a typical ACH transaction is processed. On the first of each month, your fitness club or mortgage company electronically sends a request to your bank to transfer $50 or $1,000 from your bank account to the fitness club or mortgage company's bank account. The third-party processor provides the tools to businesses to make this possible. The company receiving these funds, in this case the fitness club or mortgage company, typically has a written agreement signed by their customer giving authorization for the electronic debit or ACH transaction to happen. New rules make it possible to debit on a recurring basis from a telephone call or internet site provided the customer authorizes the debits. The $50 payment intended for the fitness club is still in the customer's bank account but no longer available to that customer and is typically flagged as a pending ACH debit. Essentially, it's a hold on that $50. At this point, no money has actually changed accounts. The ledgers show the $50 transaction, but it's all digital. Until accounts are settled and the payment is cleared, the transaction is not official. This process of officially settling the transaction dollars can take up to 4 business days. This diagram shows the transaction flow using a third-party processor to assist the business or merchant in electronically debiting their customers. The role of the third-party processor. Most banks do not have the tools or resources to allow businesses to manage ACH transactions, and that is where the third-party processor steps in. The TPP you work with has a relationship with a bank to use their Fed line. It's the pipeline that carries the transaction data to the Federal Reserve. The processor typically has a good amount of money on deposit with the bank to cover the bank's risk. The advantage of working with a third-party processor is that their front-end tools, for example software, internet product, or integration tools, are much more user-friendly than a bank. What should you know? Pricing is typically a function of volume, but you shouldn't have to pay much more than 35 cents per transaction, and in cases of high volume, this can drop considerably. You should not be paying a discount rate in most cases except in higher risk categories. Returns, non-sufficient funds, etc. should not be costing more than $3. High risk may change this. Monthly fees no more than $20 to $25. Most importantly, be sure of the stability of your processors. Many processors have arrived on the scene, but few remain in stable positions. Often, these new processors have to turn to processing transactions of high risk in order to stay afloat. Sponsor banks don't like these high-risk transactions, and if the processor can't offset these transactions with a substantial increase in low-risk transactions, it's only a matter of time before they're dropped from their sponsor bank. This leads to the processor having to jump from bank to bank, placing you and your transaction in a precarious position. All the while, you know little or nothing of it until it's too late. Enhancements and integration of third-party utilities that can benefit your operation should also be looked at. For example, it's now possible to ascertain whether a checking account has funds in it. A well-positioned processor will be integrated with the ATM networks to provide your operation the ability to check account status live for balance. Tools for submitting and reporting should be thoroughly examined. Integration utilities should be available, and one spot that should be closely examined in this area is security. While the credit card networks have PCI compliance safeguards, the ACH network has been slow to adopt a similar approach. An ACH processor with your best interest in mind will provide methods to safeguard sensitive data for any integration technique. Make sure your processor has been in business a few years and has some mainstream clients. A third-party processor processing high-risk transactions telemarketing, etc., can and has been taken out of business by an unscrupulous company. Ask about some of their clients and front-end tools. The better processors are always looking to make product improvements. Account verification is a major improvement. You can now ascertain if the check writer has a valid account with money in it before you take payment. Coupled with a processor with a strong collection program, and you can dramatically reduce your risk of accepting bad checks. We hope you learned a little about ACH processing. Please visit our site at www.ach-payments.com for more information.